everybody. Welcome back to Mortgage Ballers. My name is Rich Hanlin. I've got a special treat for you today. I actually tracked down an incredible person, and she's sitting right next to me. She's in the Georgia, by the way. And her name, she goes by the infamous Dominique RaChe. Let me tell you what she does and why I wanted this. I asked her to come on. I met her downtown Atlanta. Well, I guess it wasn't downtown, outskirts Atlanta, at an event just recently. And we got a great chance to talk. And she does insurance. It's not just, well, tell everybody all that you do, and then we'll talk about our conversation with that. But thanks for coming on my show today. I appreciate it. I've been looking forward to this interview.
Awesome. Yes, I am glad that we align with each other. Like you said, my name is Dominique RaChe, and I do holistic planning. And what that means is we plan for everything. We want to plan for retirement, college planning. We want to plan for investments. We also specialize in Social Security, also savings and investments. So what we really want to do is show you how to grow money, save money, protect your assets, and build for your family, build wealth for your family. We provide a financial education platform because what we realize is that people don't understand finances. They don't know how to plan for the future. And with a blink of an eye, the future will be here before you
Yes,
know
it will.
So that's what we do in a nutshell.
All right. I like it. We met and there's an event, a lot of realtors. Here's the thing about those events. In this economy right now, it's been a tough 3 years for a lot of people in any type of economy where you're trying to sell anything, because people always say, I have no money to do anything. Matter of fact, I've tried to sell insurance before when the real estate market crashed in 2008. I got licensed. I could talk to people all day long, but the problem is there's a lot of blue collar workers that I relate to, and they spend every dollar they make. And so in order to put something in place, they would have to change a habit of some sort. We would go through, I'd take 3 months worth of their bank statements and credit cards, and I'd put together that, not a budget, I call it a working, but this is your actual spending habits. And I would basically say, did you realize you were spending this much at Starbucks? Do you realize you're spending this much? If you were willing to not have Starbucks 3 times a day and not eat out 4 times a week, if you could just pull back one day, that would equal $100. Maybe we just start there, because for $100, this gets you some term life. So at least you have something, and then you just get them to nibble and start making changes. Now, the rich people, I talk to them too, and they're like, hey, I've already got somebody for that. I don't know who you are. So it's just always interesting. But because I had a real estate background, I used to try and do let me look at your real estate. Let me look at your car. Let me look at your whole picture, and let's see what you got. So maybe we need to start by refinancing that house and saving you and consolidating some of this debt. Now I'm saving you $1,000. Let me now show you what we could do with that $1,000. And we'd talk about cash value life insurance. We would talk about investing, now taking and paying your house off a little bit faster. So in a couple of years, we could look at doing this again, and putting the power back to them. Now, I'll be honest with you, Dominique, true of almost anything I do, if I talk to 100 people, 20% of the people out there have an interest in doing something. Of those 20, I'm lucky if 5 people are willing to actually make a physical change. Change is tough. And so many people live paycheck to paycheck. They're like, but I'm just trying to be happy. And I'm like, happiness has a different definition for a lot of people. If you can't sleep at night, because I'll tell you what, the best time to get life insurance was yesterday, because tomorrow you're going to be a little bit older and you might have a life event that happens that could change your life forever and you become uninsurable. But if you already have that first policy in place, it can grow over time. Now I'm going to segue a little bit because I love cash value life insurance. I believe in it. I have it. And that's where our conversation started to go. And I know you do a lot more, and you would do much better for people to hear the whole scenario. But we'll go wherever you want with this. But I know I enjoyed that conversation with you, because I believe more people need to be intentional about what they're doing with their lives, because I'm going to be 58 here pretty soon. And believe me, it's been a blink of an eye. But what we're talking about today, I started 30 years ago. So I'm at the end of those charts that we always see. But take me on a road trip when you talk to people. How do you even explain how whole life policies work and things like that and the value of them?
Well, we want to talk about, so there's different types of policies, okay? So there's a difference between a whole life policy, index universal life policy, variable universal life policy, term. Those are very different, right? So what we want to do first is understand the concepts behind those. Now, when we talk about cash value and we talk about what cash value can do for you, right? So that comes with, we'll say the index universal life, for instance, okay? Again, we want to talk about the concepts behind it first. So the concepts behind that, which are great. So in most states, what you're going to be looking for with any type of investment or insurance, you want to look for growth, you want to look for safety, and you want to make sure that you're protected. Okay. So, first of all, you have savings. Okay. You can look at the IUL as a savings account. So it's not attached directly to your insurance policy. It's a separate vehicle that compounds on interest. So you're using that savings. Yes, it's tied to the stock market, but guess what? You're never going to lose money because in most cases, with a fixed index universal life, you have a guaranteed floor. What does that mean? You're never going to lose money. The stock market falls below, guess what? You're never going to lose money. You're always going to be guaranteed that 0.75%.
Yeah, I want to
Okay.
say this on that. People are like, "Oh, guaranteed." These companies take your money and they're going to try and invest it and make more than what they're paying you. But if they didn't give you a guaranteed or a floor, most people wouldn't do it because they don't want the fluctuation. They're like, no, we think we're so good at what we do. We'll give you a guarantee, even if we suck at our end. And imagine never losing money because the stock market goes like this, right? And people say average return, average return. I'm like, no, why don't you take the actual return year by year? Because if it drops by 50%, for you to get back to where you were, you got to go up by like 60% just to get back to even. So
Yeah.
imagine never losing. You don't need huge gains when you never lose. And time is your friend.
Thank you. Yes, you articulate so well. I love it. I love it. So part of that also comes with okay, so we're talking about averages of 8 to 11% with the stock market, and now some of these vehicles are uncapped. So that means now if the stock market does rise to 24%, guess what? You're going to get that 24%. I love that about it. Also, we want to talk about living benefits. Now, this is where a lot of people they miss this opportunity, and it's too late. So what you want to do is make sure you have living benefits. That includes long-term care. A lot of people get that confused with long-term disability. It's two different things. Long-term care allows you to have, let's say, you can't perform two activities of daily living. Well, guess what? You actually can be paid out a percentage of that life insurance policy that's going to allow you to be cared for by nursing care or home health. Also, living benefits can include critical illness. So, let's say you're critically ill. Well, guess what? You can have those same living benefits that can be paid out to while you're receiving care. So, that's something like stroke, cancer. We got to start paying attention to these things. Also, terminal illness. You only have a couple years to live. Well, the insurance company can also pay you for these. These are called living benefits. So a lot of times we look at life insurance as death benefit only. You get it, and then when you die, it pays out. But actually, now these vehicles are meant to do multiple things with just one type of policy.
Yeah. They had a lot of riders on them and things like that. You're able to stack more cash.
Mhm.
I think one of the most impressive things I ran into back in 2008 when the market of real estate crashed, and you got to put all your assets down for a bankruptcy lawyer. And they said, you don't need to put that in there. And I'm like, well, what do you mean? I got cash value. They're like, it's okay because it's an insurance policy. We don't need to see it. We're not going to touch it. And I'm like, okay, that's pretty good. I'm thinking, how much more money could I get into that? After I did that, I got really serious on my policies, thinking every year I'm going to make sure not only do I pay the premium, which builds cash value, I'm going to ask my people, can I add any extra cash? And at the beginning, it's a lot less, but these policies have grown over the year, they give me some pretty big numbers. And it's not really a tax write-off for me, but to be able to put money into this kind of a vehicle, and we call it a vehicle, the things we haven't even talked about, all the things you can do and the power of that vehicle. And why would I talk about this? Because so many people are trying to figure out how to get more real estate later on and things like that. And when the rates are all of a sudden crappy and you're like, you know what? I forgot I have that cash value.
Yeah.
Maybe I'll lend myself the down payment and go do this. Or maybe you get enough in there. Eventually you buy the rental property with the money from there and pay yourself back, because it's always got that face value going. There's so many things you can do with it. It's a very powerful thing. It's a tool. I call it a tool, but it's I'm watching people do more and more. And let's be honest, I was sharing it with you. Bank of America, JP Morgan, Chase, like these banks that have all this money, you take the big hedge funds, they insure their own money with these kind of policies.
Yep.
What do they know that we don't? Well, they don't have to give them up for bankruptcy. They can leverage and use that cash for some guarantees. And guess what? It also, let's talk about tax-free growth.
There you go.
I need to take some money out. I have a lot of people, Dominique, that they get to my age or a little later, they start retiring. They're like, this is bad. The stock market's down this year. I don't want to take any money out this year. Cool. This year, I'm going to supplement my insurance with my life insurance policy, the cash value there. And then when the stock market goes up, because no one wants to take money out while things are going down. So by having two different scenarios, you have a diversification, number one, but you always have cash available, number two. And number three, you can start to play the stock market against itself when you have those guarantees on one side. And people are like, Rich, what are you talking about? You do real estate. And I'm like, no, but I also am a big believer that we're all going to die one day.
Yeah.
And I have kids, I have family, I have legacy now that I want to leave. And it's not that hard to do something. I'll get off my soapbox.
No, I'm glad you said that. One of the big things that you talked about, protection from creditors. Oh
Yeah.
my God, like that. That I don't think people understand that, you have a place where you can put your money and nobody can touch it.
Yeah, very protected.
Legally. And also it's growing tax advantage. And when you pull it out, as long as you have access to that money and it's in there, you can take it out income tax free, tax advantage. Yes. So we want to definitely use this as a tool to help us. A lot of people, like you say, we're looking for money, looking for ways to invest. We got to start doing it for ourselves. We got to start being our own bank. And this gives us the opportunity.
I've heard
to
that
do
term
that.
recently,
Yep.
people saying that, but that's what they're referring to. You're seeing people on YouTube and on Instagram saying, be your own bank. What do they really mean? This is what they're talking about. Lend yourself money, pay yourself back.
First. Yeah.
And it's, why are you doing it for the banks? They're just taking your money out of your checking account and lending it right back to you. I mean, so lend yourself money. And people say, well, it takes a long time to get to that amount. Hey, the earlier you start, the better. But I will tell you this. I started with one policy. It was $28 a month. That's all I could afford. I was in college. My dad died. And I said, he had nothing. I'm like, that's crazy. $100,000 policy. Matter of fact, it wasn't. It was like $50,000. I paid $28 a month, New York life insurance. Still have that policy today.
Okay.
It just pays for itself. But then I got real serious. Entrepreneurs, people in the real estate industry, we're self-employed. You come into these big chunks of money and you can actually do some serious good damage with that money. Where can I put that money? Well, I need it later. Okay. This is your guarantee for later. Make sure that you're putting at least 50% of those big checks into something that's guaranteed for later,
Mm-hmm.
and then if you need access to it, you can get access to it. They're not locking you out. But after a couple of years, the compounding on there, it could pay for itself. You have a tough year, cool. I'm not going to pay the premium this year. The policy will pay the premium, and it's still active. This policy has helped me out. That original policy got to $10,000 cash, and that saved me at a time when I needed some money. And I thought it never would add up to nothing, but when I really needed it, I had about $10,000 sitting there on that policy. I mean, I was 20 years old when I did that. I can tell you I'm heavily invested into life insurance nowadays. I stopped putting money in the stock market. I've maxed out as far as IRAs and stuff like that. I don't want any more of that. I want more real estate, and I want more leverage that's protected. And that's why these conversations are so important. People just don't understand. And I'm like, okay, you've got to start educating yourself. You can't be afraid. Oh, everybody's just trying to sell me something. Yeah, they are. They're trying to sell you how to get ahead in life. Not everybody's trying to take something from you. And I think people need to stop worrying about all those. I mean, get with a reputable company. These insurance, how many different places can you place that insurance?
Oh, there's a lot of
There's a
providers.
lot.
There's a lot of providers. Now some don't offer everything that I'm saying. So that's where it comes in at, is knowing, what you're looking for also, and knowing what's going to work for you and what the companies, what the providers are offering as well. So I love what you said. The way that you can figure out exactly what's best for you is to do a personal financial strategy. So that's what we do with every single family, every single business, every single client. We want to look at what's good for you. What are your goals? What are your goals for traveling, retirement, kids, college education? So just as you were describing, what you do and look for avenues as to ways that that client can save, that is the same thing that we're doing. We're looking for ways that and opportunities where you can start growing money, saving money. And a lot of people just don't know until, you sit down with them, because we're not talking about these things at the family table. We're not talking about ways to what does it look like in 50 years with retirement. What does that look like? How much will I have? Because retirement is really a vacation. A 30-year vacation is what they say. So do I have enough for that 30-year vacation? These are the types of conversations that we want to have when we talk about a personal financial strategy.
Dominique, I always think, and I'm like, gosh, man, if the government would just put, when every baby's born, if they would take out one of these cash value policies, put $10 a month in, by the time they're like 20 or 30, their health would never be an issue. And if they held it all the way till the time they were 60, I mean, the math is incredible. And the amount of offset at insurance at that age, the face value of those policies is quite a bit. People say, oh, that's morbid. You're thinking about your kid dying. No, I think you got it wrong. I'm thinking about my kid living. And if I can start my kid out when they're babies, it's so cheap. I have policies on both my sons.
Wonderful.
I took them out, and they're 20-year policies. They're 10 years remain. I took them out when they're 10 and 13, and I will give them those policies at 20 years. But because I know it wasn't important to me, they have no reason to want life insurance, right? It's like, life insurance? What are you thinking about dying? But I'm like, my biggest fear is that you're going to hurt yourself, and or something's going to happen to where you won't be insurable. God forbid you start smoking and you're like, well, now it's too expensive. I'm not going to do this and that. It's like, no, I already had you covered over here, and I'm going to give you those policies. Now you take them. They're paid for, but you can keep putting money in, or they'll turn over on themselves, meaning the policy premium's paid for it. But if you take that to 60, you'll never need an insurance policy again. And it's like, I loved my kids enough to do something small when they were younger, because I saw how important it played in my life. Because whether you like it or not, these tight times, there's going to be more tight times.
Oh, yeah.
And, there is no guarantee what's going to be like 5 years from now. It's so easy to give people a leg up on life. And, we'll give our kids cell phones, and we'll pay that $75 bill per month. And I'm like, but you won't put $25 into a policy that will grow and change their lives forever and leave a legacy to their kids and their kids and their kids. It starts with one person making a change in their life, because I grew up in an area people don't do this kind of stuff. They live paycheck to paycheck, and typically the paycheck's a little bit short at the end of the month. And to think
Mhm.
about doing something, but I'll tell you what, my sister lived like that, but she made a decision after she got divorced that she was going to leave something to her kids. And she started almost 15 years ago. And we forgot about that policy, but God forbid, my sister passed away right after Christmas last year.
Oh,
And she left a legacy to both of her daughters, and I was the beneficiary. I was telling them, never forget, your mom made a sacrifice when she could not afford this. I guarantee you it was financially hard on her. And all the way through her life, she never missed a payment because she loved you guys that much. And both of you have been blessed by that love. Don't let it go to waste. So that's my little plug on insurance, because people do die, and people die unexpectedly. And especially when you start getting into your 50s, they're just every day. Something's going on. Someone gets hurt, has a stroke, can't perform anymore, can't work no more. Your life will be devastated. You ready to move out of your house and go to a trailer? What, you got to plan for the unimaginable. And that's where someone like Dominique comes in. I was just so impressed with her when I spoke to her. I said, we've got to talk. I've got 600 plus loan originators that need to hear this conversation, because most of them, I told her 98% of them probably don't have anything set aside.
mm, that I love your story. Condolences and blessings to your
Thank you.
family. That is so important. You know, you do have to love your family that much to be able to set something aside and say, hey, no matter what, I know that my family needs this. I know that once I'm gone, they're still going to have to be able to do the things that I was doing for them and be able to get by. So those are all things that we want to look at when we talk about insured, being insured. We don't want to just say, "Hey, I'm gonna get a $100,000 policy and that's good." No, 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 because a lot of times you're not realizing that you might be underinsured at
Yeah.
that point.
Most people
You
are.
have to
Most people
you
are.
have to know what your insurability needs are, because if you're making $1,000, your mortgage is we'll say you have a mortgage balance of 1 million. Well, guess what? Something happens to you. Guess who's going to have to pay for that? So we want to make sure that we have our insurable need that's going to cover us. If something happens, we still have that income that's going to be coming in. We need to have 10 times the income replacement for 10 years for our beneficiaries to go on and be doing those things that, we were doing for them. So all of those things we have to start thinking about, and we don't realize until, like you say, something happens. So I commend your sister for taking those steps early on. That was great.
We
And
use these too, Dominique. We use them in business.
Mhm.
And I'll say you can use it from a marriage standpoint. I don't mean this morbidly, but 50% of marriages end in divorce. Typically someone's going to try and keep the house, and it's like, you can't afford that house, or there's equity but I can't refinance it. Well, then sell it, because I need my money out. If you had things built up, you could negotiate differently, that's more evenly and easier on the family, so people don't have to uproot. But businesses, we use it because we build cash value over time as well. If someone dies,
Mhm.
we have the key person, we got to make sure their spouse is taken care of and bought out of the company. But on top of
Mhm.
it, there comes a point in time where it's like, okay, we could take all this cash value and buy that partner out instead of having to come up with this big chunk of money. And people say, well, what are you talking about? Millions? No, it could be a little car wash thing where it's $100,000. How many people can come up with $100,000 tomorrow for even the best opportunity? And hardly anybody. How many people could
Mhm.
come up with $5,000 or $10,000? Hardly anybody. It's not an amount, it's whatever that next thing is over the horizon for you, and it's where you're at in life. I'm 58. I get it. When I was 20, $10,000 felt like $1 million, right? Now, with a company that's like one of the top 10 national mortgage brokerages, it would take millions of dollars for someone to step in. Guess what? My pool of people that could even come into this just got really, really tiny, like that big. Imagine trying to buy Apple or Google. Like, it's just not possible with those kind of dollars. So, you have to think about the big picture even when you don't want to. Don't think about it as morbid, thinking about it in investment. I have insurance. My insurance is an investment. I ain't planning on dying tomorrow, but God forbid if I did, it's all good. I'm gonna smile my way out of the world. That's how I'm gonna go.
I love that. I love that. And you know why you can do that? Because you built that foundation up to where you're secure no matter what. I know my family is good,
Well,
right?
because of people like Dominique who come along and they just show us a little different way. Stop trying to figure it all out by yourself. I mean,
Mm.
that's just give into it and take advantage of that free financial counsel and see where you're at. What does that look like? Because I wanted to know how underinsured I was. Doesn't mean I could afford it, but it was like, whoa, I'm a little nervous based on what I'm seeing. I would really screw my wife and kids if I died today. Better not die today, right? And there's such huge strategies when it comes to insurance. From term life to certain policies, whether it's a 10-year versus a 20-year versus cash value and the types of cash value, the different things. If I want to build more cash, I can add on different riders to do different things, long-term care, different things. Some of these policies, people don't realize if you become terminally ill, you can actually tap into, if tomorrow I was pronounced terminally ill, I could actually start tapping into that life insurance. I don't need to just die.
Right.
And so they have provisions for that because I'm going to need that money for that care.
Right.
So it's doing something different that my parents couldn't afford to do. And I saw how it affected them and it affected us. We couldn't even put my dad in the ground. We couldn't even afford the casket to put him in the ground. We all had to figure it out at a time when you shouldn't have to deal with that stuff.
Yeah.
And it doesn't take much to get I call it the BAM. Sorry, this is maybe not the biggest godly term, but your bare ass minimum to make sure that your family is taken care of if something happens. No one said you got to make them millionaires. That's not what we're talking about here. God bless you if you can, but your remaining spouse shouldn't have to sell everything and change their life and be miserable because you left them in debt. You left the kids. They don't even, now they got to change schools. You're setting everybody up for failure. Don't do that. It's like not hard. Little amounts go a long way in insurance worlds. And the earlier you start, you get so much more. I'm on a soapbox today. Sorry.
No, I love it. I love it. And you're totally right. I love the BAM. I'm going to have to.
Careful what room you say that in. Not good when I talk in front of churches. Sorry, Pastor.
No, it's so true though. And then also I want to go back to estate planning. How do we avoid probate court?
Yes.
Some people, this is very important. People are really can lose homes. I was on the verge of that. Not just because I had lack of knowledge about what it actually means to have proper protection when it comes to having a living trust.
Yes.
Right? A will is not going to do it for us, folks.
We run in that all the time. And guess what? Probate court loves it when people say, well, I don't have nothing to leave. I'm like, oh, you got something. I don't care what it is. My brother died. He was in South Carolina, but he never put his wife on the car. Well, the car was like a $40,000 truck paid for. She had to go through probate court just to get her name on the truck in order to keep the truck, which was free and clear because she had an $800 car payment. Now the income's gone. She's bleeding dry. It took like 4 months. She had to make 4 more payments before she could get that. I mean, how hard did we have to make that on her? Her husband died, but he never put her on title to that simple thing.
Wow. Yeah. We see it all the times with celebrities, they go through it too, just from lack of knowledge. So
lack of knowledge.
Definitely make sure that we have knowledge on all aspects.
So if somebody wanted to go back to that. If they want, is there like a link or something? If they wanted to sign up for, what do you call it? Did you financial evaluation? You called it something different.
Personal financial strategy. And
Okay.
yes, I can definitely send you my link for
Okay.
anyone who is interested in getting that done. So whether it's, maximizing Social Security, retirement, estate planning, saving for your children, as you said, that's important. From birth, we need to start getting them off and rolling the correct way.
Yeah. It's
So
not morbid, people. It's smart. That's how the rich people do it. And they do it for a reason because they know how hard it's going to be. Oh my gosh. We're going to do a couple of these conversations. I have a feeling before it's over because it's so important. I've told people I'm going to leave this industry better than I found it. And I have so many people that are leaving the industry and or trying to retire and they have nothing. I'm like, you have helped so many people with the American dream to become homeowners. Investors get 4, 500, hundreds of rental properties, depending on how long you've been doing it. But yet you haven't set your own self up. I have so many single moms that in these years, and listen to me, people, from a loan perspective and real estate perspective, we're having 3 years where the rates were high. It's been a lot slower. We went from 400 plus thousand loan officers to less than 100,000, 93 as of this year. Why are they leaving? Because they have no way to keep the balance. Imagine building this up over the next couple of years as we're starting to grow. Rates are probably going to keep coming down a little bit. It's going to be a good 4, 5, 6-year run, maybe 7 years. This is when you stack those dollars away because another lean time is going to come. You don't have to live like this when you have something like this. That's another reason I did it. I got sick of the peaks and the troughs in my income. I live off a very level average, and this has allowed me to do that. And it just keeps growing in the years I don't need it. But guess what? Even I have needed to use my cash value. So, and that's where I go when I have need, because the more you do it, you're like, wow, this is powerful. I don't waste it. I work too hard for it, but it's there when I need it. And it's allowed me to have a balanced life, even though I'm in a sales position. So I'm a big, big believer in insurance. Dominique, I know I cut you kind of short and I do apologize because there's way too much more to go here. I want you to send me the link, but we're going to have a secondary conversation. I think we're going to do Power Hour with Dominique in order to do this a couple of times because I don't think we're going to get it across to people in one time. And matter of fact, we might even do a live where we bring everybody on that says, you know what? It's one thing for me to record it. It's another thing for us to go live with Dominique and have her answer questions and actually, bring some human beings into this that have those fears and things like that. By the way, I get no money off this, people. It has nothing to do with it. I believe in it. And that's the key to this. I believe in insurance and the power that it has. And when you understand it, it can really make a difference in your life. Hardships are going to happen, but how you are prepared for those hardships is 100% on you. You have the power to not make it a hardship. Pain's always there, but it doesn't have to be further than that. Man, this is good. This has so many different implications. I'm not saying that word right, but this is such a powerful topic that we're going to touch on this a lot more because we're getting ready to go into a time when I think people are going to start making more money again, and they need avenues in order to take care of things. And if one person gets it and they change their lives and the trajectory of their family, if my sister can do it, and she sure as hell couldn't afford it. Let me tell you, the girl made $40,000 a year, even all the way into her 50s. $50 a month was a lot. She had a $250,000 policy because she started it 20 years ago. I think it was 20 years ago. And she was able to get a $250,000 policy. I mean, that was term life. She never even got past that. But if she can do it and make it a priority, and guess what? She did pass away. God called her home, and her time on earth was done. But she left a legacy to her two daughters that will give them a leg up on life. They're in their 20s. What they do with $125,000 could change that for life. If they just put it in the S&P 500, if they pay cash value for a life insurance policy right now, and let that go for 40 years. I'm telling them this is an opportunity like $100,000 at 20 years old or 25 years old till you turn 60. Do the math, people. It's a lot of money. Don't waste it. Don't squander it. So there are real scenarios where people have achieved these things using these kind of policies. I have used them. I told how I use it, and we're going to talk more about how I do it. But it all starts with a conversation with someone like Dominique, and don't be afraid. She's not going to bite you, I promise. It's just a conversation to show you some of these tools, educate yourself. That's really what you're doing. Learn what you don't know, because a lot of people think, oh, life insurance means death. I don't want to talk about death. And it's like, no, you do it because you're living. That's my 2 cents worth. Well, I got to close you out. Is there anything you want to say on the end of this video that leave with people?
Start now. That's what I would leave with. Don't hesitate. Start now.
I love it. Start yesterday. But yesterday's gone, so you better start now.
There you go.
Ladies and gentlemen, that is Dominique. And say the last name, RaChe.
Dominique RaChe is my middle name.
RaChe.
Yes, on social media.
And she is on social media. We're going to get that link, but we're going to team up with her a couple times because I want to really drive this home. People ask me, what do I do? What are my investments? Well, this is one of the things I do. And when I run into incredible people that make it easy to understand, you know, and I can hear the heart behind it, I don't like salespeople. That's not what I felt with Dominique when I met her. I'm like, oh, we just had a great conversation. And believe me, I'm always picking and choosing. I'm always checking people out, asking those probing questions. And I couldn't break her. I couldn't break her game. And I said, all right, she's the real deal. We need to talk outside of this event. And that's what we did. So today was our first conversation. Thank you so much for just taking the time with me.
I'm so grateful, Rich.
Well, you're awesome. So Dominique, we're going to get back together. We're going to do Power Hour with Dominique. We're going to get that link. Take her up on it, because if not, you're going to hear people will. And just learn what you don't know, because the smallest amounts can be incredible. And the market is changing. Real estate, the last 2.5 months since January 1st, we are seeing a huge record months in our company. So something's going on out there. So the money's going to start going here pretty quick. And it only takes a few loans a month to have excess. And you need to start having a plan where you can put some of that excess. Don't waste, don't squander, because those are gifts. When you can have good years, because we know the lean years will come, this is how you balance out your life. So right on. Dominique, thank you so much for coming on. I thank you, girl. We will follow up. Ladies and gentlemen, like we always say on Mortgage Ballers, we get off an incredible interview. Stay thirsty, my friends. All right. Thank you so much. I'll circle back with you and we'll get another one, okay?
Awesome. I'm looking forward to it. Thank you.
All right. You have a good day and we'll talk soon.
You too. Bye-bye.